Aisha, the construct of the market, I think, is pretty much the same. It is exactly what it was last Monday. It is exactly what it is this Monday. The construct of the market is following that the market direction is higher. It is consolidating. FIs, the FOMO continues, and at lower levels, the desire to participate, I think, in mid and small cap stocks is only increasing. So you will see a bit of a chop and churn in mid and small cap stocks, but in general, the approach I think does not change. Stay long, don't go short. This market I think is on course to make a new high. Will it be made in May or will it be made in June? That's anyone's guess. But for the moment, I guess bulls have an advantage, bulls have an edge. You may spend some time here, get nicked around by a couple of, a few hundred points on the Nifty, maybe 1,000 points plus on the Bank Nifty. But that I don't think changes the basic construct of the summer rally 2023. I'm calling it the summer rally of 2023, where I guess the last part of the rally is yet to come.
Okay, so that's the construct of the market. A lot of moving parts, but as we said, it's pretty much been the same for the past many trading sessions, and that chart really tells the tale. For the last 15 sessions, we've been in a tight range. A quick roundup of the global markets. It was a second straight weekly loss on Wall Street, very flat close on Friday. This morning, the Asian screen as well is looking a little bit mixed, and you've got the SGX Nifty as well, indicating that it could be a bit of a soft start. But the other big talking point is definitely on the political side, and the fact that there was that very emphatic victory in the Karnataka assembly elections this time around by the Congress, which will not only help them retain their 3 Rajya Sabha seats next year when the 4 upper house members retire, but also take the strength from the existing 5 to 7 in the next 3 years. Nikunj, any implications from a market standpoint?
I doubt it very much, Aman, and I'll tell you why. Because exit polls, in a sense, indicated that it is going to be in Congress victory. So, frankly, from what the exit polls indicated and markets reacted to exit polls, markets always react to the exit polls. And if the final outcome is not in sync with what the exit polls have indicated, then markets, they get surprised and they react a bit more. So, I don't think from a verdict standpoint there is any kind of a change in what the exit polls were indicating. So that is not going to be a market moving news. Since you have the big election in 2024 and you've got state elections, you've got Mizoram, you've got Chhattisgarh, you've got Madhya Pradesh, what could be the implications of that? Now, is this a time when the BJP government will have to do some soul searching and say that, okay, what can we do differently in the run up to the 2024 election and for the state elections? So the two eyes I look at it is, one, in Karnataka it was anti-incumbency. That's how Karnataka has always moved. One gets voted out, the other one comes out, the cycle continues. That's the pattern of that state electorate there. But second, and I think more importantly, is that please remember there's an anti-inflation verdict also here. And this year we may, I hope not, fingers crossed, we may have the El Nino impact. So really at the lower bottom of the pyramid, semi-urban, you know that there is a bit of an inflation pinch and there could be a bit of a chug and a struggle if monsoons are not great here. So you could actually see more welfare schemes getting rolled out, more focus on inflation. I guess now what you will see is going to be focus on welfare schemes and more anti-inflation measure. By the way, inflation's already come down, so it will have an impact with the lag effect. But that is something which I guess the current administration would be cognizant of. Simply because next 3-4 months they say that the 3-4 state elections will be more like a semi-final for the grand finale in 2024.
Yeah, absolutely. That's exactly what CLSA as well has said on the Karnataka election verdict, saying that the Congress party, while it ousted the ruling BJP, all opinion polls see PM Modi re-elected in the 2024 elections. And to the point that Nikunj was, making about inflation, stating that rising anti-incumbency with high inflation and unemployment definitely is prevalent, and they expect the government to combat inflation with price controls as well as subsidies, and they see support for rural demand in El Nino. Having said that, a lot of earnings as well to Lumber Crunch this morning. You've got a good set coming in from both DLF, HPCL, from Tata Motors, Naveen Fluorine, GE Shipping, some of the more actively traded counters, an inline set from an Ami Organics, from an IOB, from APL Apollo Tyres, and a weak set then from Manappuram Finance, from Avenue Supermarts, from Affle India, and from IGL as well. Some of these companies we're going to be chatting with, of course, in the due course of the show today. And earnings today, you've got PVR, you've got Pfizer, you've got Century Ply. But largely so far, this quarter has been an inline set. There haven't been any extremely negative surprises barring IT, I guess.
I mean, if you think about it, within IT, it was also Infosys.
Infosys, yeah.
I mean, that's really been the eyesore, so to speak, for the large Nifty 50 numbers. Barring that bit of, bit here, bit there, you may see individual downgrades in some companies, but in general, I guess this earnings season has been satisfactory. The forward-looking commentary coming from banks, FMCG companies, consumer companies, auto companies, they are not bad at all. That's a scorecard for you. What is important here is that companies where numbers have been in line and where they have been above, the weightage of some of those companies is far higher than the 10 companies where the weightage of the stocks is much lower. But since we are with numbers, the big one which everybody tracks with a magnifying glass is Tata Motors. Numbers came on Friday, and numbers were not bad. Tata Motors is beating the market, both with their debt reduction and their margins on the EBIT margins on the JLR front. So frankly, from a market standpoint, these numbers are good. Now, if numbers are good, what happens to the stock? My sense is that it may not see a large reaction, so to speak. See, numbers are made not because the stock has gone higher. They are based on what the projections of the company could do. And I feel that the stock run-up in anticipation of the numbers has been quite strong and it has been quite decent. So it really could be a case of buy the rumor, sell on news, at least for Tata Motors in the short term. And why do I say that? Nothing wrong with the numbers, but I guess markets were anticipating a numbers beat. And when you're anticipating a numbers beat and the stock is run up, then it really could be a case of I told you so. So I hope not, but Tata Motors could be a case of I told you so.
Okay. Although Demart, I wonder what led to the miss on margins, because that's also is a very, very widely tracked company.
No, it's a retailer which is sensitive to inflation. It's a value retailer at the end of the day. See, in a value retailer, what you have to do is that when product prices they go higher and your proposition is that I will always be sasta sundar tikhao, I will always sell at a price which is much, if you come to me, you will get bulk, you spend time with me and you save, save money. They had to take haircut. They had to compromise on their margin. So whatever merchandise they were doing, they had to mark down their merchandise because they had to mark down their margins, because you cannot take the merchandise price higher simply because that loses your proposition. See, the Demart management knows the consumer psyche and they are not here for a quarter. They are here to build a franchise which would last for years. And typically when the customer has a belief that a Demart store will always give you something cheap in a tough market, you may say, okay, 2 quarter, theek hai. I will take a hit on my balance sheet, but the customer is not going to step out to some other store or will not migrate to a Reliance store or to a Jio platform or to ONDC.
Yeah, they're going to stick with Demart, and which is